In today's video, I'll show to you how I made 1,730 USD by using open interest strategies on a crypto market, especially on Ethereum. Let's dive into these three trades where I made 761, 203 and 765. Let's cover each trade. First trade, it was I took short. What was the reason behind that? There was two reasons. First reason, where it was when price was, as you can see, above value area high of this entire range, and price was really close to this swing high. Honestly, after significant movement without a pullback, it's definitely a resistance area. And of course, the second reason, it was that reason was based on open interest. You can see it was exactly this local range high when open interest started to increase quite rapidly, 3.3%, 155,000 contracts. If we multiply that amount of contracts by average price, it would be more than 700 million worth of position, which a lot, honestly. And for absorption, it's good enough. Why I didn't take it as a breakout? Because breakout always better to do when we have something like this, for example, or price in long range, 3 weeks, 5 weeks, 6 weeks, and after that slowly break it. Yes, after that breakout would be beautiful. Or we take breakout, for example, price did significant drop, range for several days, and here we trade break up with open interest. Beautiful. But when price reach into key resistance zone, and here you have some local consolidation for one day, in most cases that consolidation would be trapped. That's a reason why I took trade against it. My risk per position in this case was only 250 USD. Honestly, as you can see, I could keep this trade way longer and make way more money by simply doing nothing. I took another trade. It was super local scalping trade, also based on open interest, where I made only net 203 USD. What was the reason here? You can see there was this also rise in open interest, and after that price started this small squeeze down. By the way, you can get a manual about my strategy by simply following me on my Telegram channel. There would be a link in description. Go down and follow me right now, and after that our bot automatically will share with you this PDF manual where you can see how to take trade and also mimic this strategy to be profitable during rise and drop. As I told you, reason was here. What was the reason? First reason, we had local consolidation, which is good, and after that open interest entered here, and after that local squeezing. I like to take trade after some local squeezing when open interest is not getting out, because if open interest during squeezing getting out, I don't like it. Main reason why I closed the trade, because I was immediately this open interest dropped, and I had a thought that there would be some pullback, range could be extended, something like that. That's a reason why I didn't keep the trade much longer. And of course, a third trade which I took here, where I'm at 765 USD, with risk 250. Reason was the same. We had this downward structure. Open interest started to increase exactly at range high. That's the reason why I thought that this downward structure would continue. You can see I took a trade here. For a start, I thought that there could be some bigger range. That's the reason why I didn't take trade exactly here at high. But when I saw a pullback from this swing high, for me it was obvious that all of this volume that entered here played out at this moment as a key resistance area. That's why you can see how I use open interest together with a market structure, and together they give me better understanding of a market. Because if I would use simply open interest without understanding market structure, it's not worth your time. When price gave me my 1 to 3 risk reward, what I did, I closed this entire position. Honestly, I think at this moment that closing this trade too early, it was a mistake. You can see when I closed the trade, it was exactly here. Open interest didn't wiped out. Open interest continued to increase. Why does this matter? Because what's logic behind this? Logic is super simple. Some people start looking for reversal. Those people who look for reversal, they build long positions here. When they build long positions, they increase the amount of open interest. But when they build long positions, someone must sell them. And someone sell way more than they build, and price go against that. And often, how it works, and often a lot of people think that price drop a lot and there must be pullback. Because of that, they build long position. And those short sellers, their major goal is only simple. They push down until those people who build long got liquidated. Because of that, they sell into bottom. When you close long, you sell. And those people who push down with short orders, they close their short by buying back. And that's how market makers create liquidity. That's a reason why you always must have exit plan, or liquidation would be your exit plan. I understand that it's a little bit difficult to use open interest because you need to combine it with market structures. That's the reason why I record for you this beautiful video lesson where I share more secrets and difference between traps and breakout and stop loss hunt, because they're free strategies that you can use. That's why watch this lesson to also take such beautiful trades. And also share a comment. Do you like when I write more updates about my trades? Have a good day.